Hello everyone, welcome to my YouTube channel. Today we are diving deeper into the Wyckoff method. I have already talked about these concepts before, but I want to go further because if we truly understand these strategies, we can read the market with more confidence. Even though Wyckoff's ideas are decades old, they are still relevant today. The first principle is the law of supply and demand. As most traders know, when demand is greater than supply, price rise. When supply is greater than demand, price falls. When supply and demand are balanced, the market moves sideways and search for its next direction. This might sound basic, but if you don't apply this mindset when analyzing the charts, you will constantly find yourself asking, I bought, why it's going down, or I sold, and now it's going up. Understanding this law stops that confusion. The second law is cause and effect. Wyckoff believed that price movements don't happen randomly, they are the result of preparation. For example, accumulation is the cause, the uptrend is the effect. Distribution is the cause, the downtrend is the effect. Before a breakout or breakdown, smart money is quietly positioning. You might see a stock moving sideways and think, nothing's happening, but actually, that's where the big players are entering the game. The third law is effort versus result. If price rise on strong volume, the trend is healthy. But if price rise with weak volume, it might be a trap. Also, if volume increase while price moves sideways, a breakout may be near. As you can see in this graphic, after a significant downtrend, we observe a sideways movement in the price. During this consolidation phase, there is a noticeable increase in volume, which indicates accumulation. Following this period, an upward trend begins, and the rising volume confirms the validity and strength of the new trend. Always ask, is the effort matching result? As you can see in this chart, when the price rises between two blue lines, the volume decreased, and after that, sellers entering the market. Wyckoff imagined the market as if it's controlled by one big player, the composite man. He represents smart money, institutions, banks, and professional traders. His goal is simple: buy low, sell high, and take advantage of retail traders. What you are looking at is the Wyckoff accumulation phase, a structure that shows how smart money accumulates assets after a prolonged downtrend. The process begins with preliminary support, where large players begin absorbing the remaining supply. Selling pressure is still present, so at this stage, any upward move is typically just a temporary pullback within the ongoing downtrend. Next, we reach the selling climax, a point where panic selling reaches its peak and volume surges. This often signals the end of the downtrend. Following that, price quickly rebounds in what's calling an automatic rally. This rally doesn't necessarily indicate strong buying. Rather, it reflects the absence of further selling pressure. Price then enters a sideways trading range. Within this range, we often observe secondary tests, where the market retasts the previous low to assess if any supply remains. From a technical perspective, these can also appear as failed lows, suggesting that the downtrend has likely ended and we are transitioning into the consolidation phase. This range can include both bull traps and bear traps, designed to mislead retail traders and shake them out of their position. But the most critical parts come in phase C. Here, we may see a spring, a false breakdown below support intended to trap bears and trigger stop losses. This move often tricks traders into opening short position or selling, but in reality, it's a setup by the composite man. A successful spring is followed by a sharp move upward, known as the sign of strength, where demand clearly outweighs supply. Finally, we got a small pullback forming in the last point of support, confirming that the market is now in an uptrend. At this point, the accumulation phase is considered complete, and the markup phase begins. So now on what you are seeing here is the Wyckoff distribution phase. a structure that represents how smart money offloads their position before a major downtrend begins. We start with preliminary supply. This is where large players begin to sell into strength, but demand is still strong enough to keep the uptrend going for now. Then comes the buying climax, a sharp move upward with a spike in volume, often driven by retail FOMO. This is usually the final push before distribution begins. After buying climax, we get the automatic reaction, a sharp pullback as initial selling pressure kicks in. It's not a fully reversal yet, but it's the first sign of the weakness. Next is the secondary test. Price retest the high to check if demand is still present. Often this move has lower volume, showing that buying interest is fading. Price now enters a range-bound structure, creating bull traps and false breakouts. In phase C, we might see an upthrust after distribution, a false breakout above resistance that traps buyers. This is the opposite of spring in accumulation. After the upthrust after distribution, price reverses sharply lower. A clear sign of weakness appears in phase D. Confirming the distribution, this is where the composite man has already sold most of their position. Then we see a last point of supply, a failed rally attempt that sets the stage for the final markdown. Once support breaks, the markdown phase begins, and we enter the downtrend. This chart represents a classic Wyckoff distribution phase. We can see Bitcoin price moving between a range at the top, indicating a period of supply overtaking demand. The highlighted region shows a potential upthrust after distribution, a fake breakout that traps late buyers. After failing to hold above the resistance, the price breaks down, initiating a markdown phase. This is the where smart money exits position and retail is left holding the bag. And here we have strongly example of Wyckoff accumulation. After a long downtrend, the price enters a sideways phase. Showing sign of demand absorption, this area has the potential for a spring. A shakeout to test supply triggers stop losses. Once the spring is confirmed as strong rally, the markup phase begins, signaling the return of demand and the beginning of a new bullish trend. As I told you previous section, we should always check the structure of market. What is our way? Are we in trend or market is in sideway? Why this is important? Imagine market is the uptrend and you are trying to enter short position. Don't bang your head against a brick wall. How strong is the asset in relation to the market? Here we should observe how the asset moves in comparison to the index or overall market. As shown in the chart, the yellow candles on the left represent the stock, while the purple candles represent the index. The same applies to the next chart. In the left chart, we observe a positive correlation. The assets move in the same direction as the market. However, in the right chart, there is a negative correlation. Do I have valid reason to invest in this asset? First, is the company demonstrating growth in profitability and sales? Is it effectively utilizing its resources for new investments? What about its debt situation? Is it sustainable? From a technical perspective, is the asset well positioned? For example, if we are considering crypto, does it show positive correlation with Bitcoin? And importantly, does it have sufficient trading volume? So determine how likely is the move. Is the asset ready to move? What do the price and volume saying? How strong trend or sideways? In this step, the first four conditions of the Wyckoff method are met. A clear accumulation or distribution schematic has formed, and the price has reached a technically favorable zone. This marks the right time to enter a position with a good risk-reward setup. Before we wrap up, have you tried using the Wyckoff method in your own trading? Let me know in the comments. I am really curious to hear your strategy. Thank you for watching. In my next video, I will choose some stock and do quick fundamental and technical analysis. If you would like me to analyze a specific stock, feel free to drop it in the comments. Don't forget to like the video and subscribe to channel. See you soon.